A fast fashion giant Shein has launched its Hong Kong initial share sale, ending the company's years-long pursuit of an IPO. It's looking to raise up to $1.8 billion. CNA's Jeraldine tells us more.
This is Shein's third shot at listing, with previous attempts in the United States and United Kingdom derailed due to scrutiny over its supply chain, as well as regulatory roadblocks. Its current valuation of $27 billion is a far cry from its private market peak of nearly $100 billion 4 years ago. This comes at a time of slowing growth for Shein, which was at one point one of the most talked about companies in retail. Revenue in the first quarter of 2026 grew just 1.1%, and the company reported a $99 million quarterly loss. Analysts say Shein's pandemic-era business model is now being tested by the new market, where investors are moving towards AI-related investments. Questions also remain about how Shein can keep growing, with the US ending a policy allowing billions of dollars of low-cost imports to enter the country duty-free, and European authorities also imposing a €3 flat fee on parcels. One analyst expects retail investor appetite to be lukewarm, unlike other high-profile listings like Chinese AI-related firms CXMT Corp and Momenta that attracted massive oversubscription.
When we talk about retail business, when we talk about online, retail business, there's not something that we can have a very huge, growth story. So they're just doing business good as is, but slowing down, there's definitely no question asked. So it's a matter of the valuation now. It's priced reasonably, but I don't really see so much upside on their first debut in Hong Kong market.
Response to Shein's IPO has been mixed on social media. On Xiaohongshu or Red Note, a recent poll showed that more users voted to buy the company shares than not to buy, even as comments urged caution. However, reactions on social media in Hong Kong have been more negative, with some expecting shares to trade below the listing price and others questioning if the company is worth investing in. One scathing comment called it a kaipang, which means chicken farm or a trap for investors. Shein says it aims to use 80% of the funds raised to improve its technology and boost its international presence. Cornerstone investors, including Tencent Holdings and Boyu Capital, have agreed to buy about $383 million worth of shares. At the same time, Shein will pay up to $3.5 billion in cash and shares to selected existing investors to help compensate them for the drop in its valuation. Trading will begin on 1st September. Jeraldine, CNA, Hong Kong.